Hey everybody, Mike DeSepoli, Heritage Financial Advisory Group. Welcome to the Heritage Market Update for Tuesday, August 9th, 2022. Hope you're all having a great week today. Here to catch you up on the market and some important economic data that we will get our hands on tomorrow. First, we'll start with the market today. We saw stocks pull back today, taking a bit of a breather in a very low volume session, which is what we would anticipate seeing in front of tomorrow's inflationary data. Now, stocks have been on a good run, strong month of July, good start to the month of August, but now we're starting to see some of that lower volume seasonality come into the markets, right? It's summer, a lot of people are away, a little lighter trading volume in the markets, and like I said, a big event tomorrow with the release of the Consumer Price Index with data from the month of July. Now, before we get into the charts about the market, all you really need to know about the CPI for tomorrow is it will determine the direction of the markets as we move forward, right? A number that comes in above expectations, or what we would call a hot number, will not be well received by the market because that will indicate, that inflation is not only not decelerating, but it is continuing to climb, which would further the narrative that the Federal Reserve is far from finishing their interest rate hikes. On the contrary, if we see a number that at least comes in at expectations or even better below expectations, right, showing the deceleration of inflation and potentially that inflection lower, markets are sure to rejoice around that, and stock bulls will have something to feel good about. So until that comes out, all we can really do is monitor the data, see what that release looks like at 8:30 a.m. tomorrow, and then make some adjustments from there based upon what the data tells us. Let's take a look at the market. We'll start with the S&P 500, and I wanted to give us a more expanded view today because the markets, right, have pulled into a very important area. Now, when we look at this chart here, this is your S&P 500 going back into 2021, and we can see obviously where the highs were made in January, the subsequent breakdowns and failed rally attempts that the markets gave us, and then for at least for the time being, that major index low which occurred on or around June 12th. Now, the market has built a nice base coming out of this low, right? Kind of taking the stairs up with some little pullbacks along the way. And now we have come into some very critical resistance areas, actually a twofold resistance area. The first being we are basically at a level that we saw the market try to rally, fail, and break down from in early June to make those lows, number one. So that's this line in the sand here, as well as we have one of our moving averages. This is the 100-day moving average, which is essentially the market price averages flattened out with less volatility over a 100-day period. And we see that they tend to act as support and resistance levels for the market, depending on is the market below it or above it, right? So looking back into last year, the market was above its 100-day moving average for quite some time, pulled lower into it. That acted as support, kind of a base, and the markets move higher. But once we got that breach below it and stayed below it, right, the market has had a few failed attempts to get back above that level. So we have succeeded in getting above that level. We're hanging out there right now. Tomorrow's CPI report will determine, do we continue on higher and continue to clear through some of these critical resistance levels, or is the market due for another pullback? Let's look at the NASDAQ. Really the same story here, folks. The NASDAQ has obviously done a little bit of a better job getting above those June lows, right? Because we've basically looked at the S&P previously, just to go back to that. The S&P June lows and where we are now are almost identical. Where we look at the NASDAQ June breakdown and where we are now, the NASDAQ has been able to get above that level. So that's good. That's one check in the plus column. But again, CPI is going to dictate where this market goes from here. So it's natural that the markets kind of just had a little bit of a choppy, boring style day today. Ahead of the CPI, a lot of investment managers and traders are not really going to add or subtract many positions ahead of a big report like that. And we look at where the market has come from. It's been on a nice rally, and a little consolidation, a little catching of the breath, if you will, would not be a bad thing. When we take a look at the Fear and Greed Index, obviously, as markets have rallied, we've seen the fear and greed levels come off of extreme fear. About 2 weeks ago, we moved into fear, and now we're about neutral, which is what you really would expect coming into such a huge report of this magnitude tomorrow, right? So we'll be looking at this report very closely. We'll be looking at all the components of it, consumer prices in terms of food, energy, consumer cyclicals, non-discretionary items, etc. Because, of course, our case to be made here is that as inflation decelerates and rolls over, it will allow the Federal Reserve to take it easy with their interest rate hikes. We think the market is starting to read through to that, but again, we need some proof tomorrow that that is actually the case. Let's take a look at today in the market. This is our heat map today, about what you would expect to see on a choppy tape in the market. Just to look at the major averages. Yeah, basically the Dow Jones down about 58 points, almost flat. The S&P was down at a little less than 0.5%. NASDAQ down about 1%, right? NASDAQ had been leading the way higher. Today it leads the way lower. So this is what you would expect to see on a day where the NASDAQ was down and everything else was mostly flat. We did see some selling today in the semiconductor space, right? The chip space. Now, a lot of folks have reached out and said, I find it odd that as soon as the Senate passed a bill targeting production of semiconductor chips, that this area started to cool off. And folks, that's quite normal. The old saying where they say buy the rumor, sell the news. The markets had been pricing in the semiconductor bill for quite some time. We saw a lot of movement, positive movement in these stocks. So it's natural when a bill actually passes, we get a little bit of a step back, kind of people just repositioning their books and saying, okay, we got the news we were looking for. Where do we go from here? That coupled with a revenue warning yesterday from NVIDIA got this area of the market a little spooked. We think this is much to do about nothing, folks, okay? Yes, we're going through economic cycles, expansion, contraction, and companies' numbers will adjust through those cycles, but the semiconductors are the industrials of the past. They are the heartbeat of our economy, and they're in almost every single thing that is manufactured these days. So this area, this group will be just fine. Just a little bit of adjustment going on there. Energy, we saw a rally today, and like I said, pretty much flat across the board. Over the last month, though, it has been a good rally. This is the type of activity you want to see. Tech leading, semiconductors coming off a really strong month. So again, the last couple of days, I wouldn't make too much of it. But nonetheless, all eyes tomorrow morning, 8:30 a.m., CPI report. For those of you looking to tune in live, all the major news financial networks will have that data as it's released, excuse me, at 8:30. And of course, if you missed that, we'll be back to update you on that as well. So if you have any questions, reach out to us. Always here to talk to you about the things that matter with your money. We hope you have a great day, and we'll see you back for the next Heritage Market Update. Take care.